Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April 5th. Today we got ADP employment change. This is for the private sector. Look at this, 145,000 from the 261 previous one, and we were expecting 200,000. So 55,000 less employment change in the private sector. That is destruction. This is what Feds want. And also we got a 10 ISM non-manufacturing PMI, employment, business activity, prices, and new orders. And look at all these numbers. Everything is way lower than the previous one. So demand destruction in employment, low prices, lower orders, and also EIA gasoline stocks and crude oil, well, still in negative. So inventory is taken out massively. And one of the things that we were watching was also the composite and services, also way lower than expected. So what is happening then? Why are we selling off? Well, basically, right now, what we are focusing on is to avoid recession. Or if we enter recession, to just have a soft landing, a mild recession, and find value again on the market. But if you check the yields, the 2-year yield is minus 2.50 on the day. This is quite hard. And the 10-year is minus 1.83, right below 3.32, this pivot that we were holding until now. So basically what is happening is that inflation is no longer the main issue. It's an issue, but it's not the main focus right now for analysts, investors, traders, and the overall Fed. I think everyone is seeing signs of cooling down of inflation, but the thing is, are we going towards a recession? And how is going to be that recession? The banking crisis, the Fed pushing rates higher for longer. Now, a lot of indicators and economic data are pointing towards recession. The only thing that it's lacking is the labor market. We saw today on the private sector that employment is way lower. And this Friday, we are going to see unemployment rate and non-farm payrolls. And that is going to be huge because right now looks like bad news is not good news anymore. We are not trying to cool down the economy. We are already cooling down. The thing is to avoid a hard landing. Feds are going to raise interest rates by 25 basis points next May, I think, to reach the 5% terminal rate. And this is interest rates for September. They are still going down, 4.5. And in December, 4. 4 minus 3 point in the red for the December interest rates futures. So basically, market is still saying, okay, well, Fed, you are going to be needed to cut rates this year. Fed said that they are not willing to do so. They have no plans to do so until 2024. But bonds market is just not buying that statement. They are saying that you are going to massively cut interest rates this year to support the economy because we are, oh boy, we are deep in the red. We are super cooling down. And look at this. This is just the bet that the markets are saying. Dollar is in another fight towards BRICS versus SWIFT in order to maintain its power on the geopolitical economy and geopolitical tensions for dollar to be the main the main exchange. But the thing is that, I don't know, look at this. This is the Nasdaq. This is 30-minute chart, by the way. This is Apple, minus 2%, Microsoft minus 1.30, Tesla minus 3.56, now trying to support around 104, 184. Amazon, look at this. This is just brutal. Minus 2.66, Nvidia minus 3%, so it's red across everything. We are now trying to see signs of support, but be careful because we already did it here and we continue lower. At some point, Nasdaq is going to find some kind of buyers, but I don't know, boys. Today I was long, I got chopped out, I turned short and I find some success, but look at this. This is just really hard to trade. Also, gold is just seeing weakness after all this push. So the main issue, remember, the main issue is the economy. Banks all in the red. And look at this. XLU 2.22 in the green. XLP 0.56 in the green, and XLV Healthcare 1.55. If we check those sector funds today, we can see for sure that Wall Street is rotating. Defensive, 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 defensive. And consumer discretionary is minus 2%. Technology minus 1.70. Industrials. Everything is in the red. Everything offensive. If we expand to the 2-day, look at this. Since 2 days ago, they are just buying utilities, buying healthcare, buying staples. They are rotating to defensive towards this Friday or longer. But what is true is the change on the sentiment. Be careful with this. Don't control your expectations because maybe we are entering something that is more than a pullback on the daily. I was hoping to hold this pivot, daily pivot at 13,068. I'm going to watch closely today's close on the Nasdaq to see if we close above that or not. If not, I think the next step is just 12,700 around here, or even the 200. We might find some buyers at some point, but I think we are going to be doing lower lows and lower highs. That's the thing for a pullback in which we may find weakness overall. So be careful because today starts what I call is just a change in the overall sentiment. We tried yesterday, we did a nice, basically a little push up here. During the overnight, we held the pre-market low, but I mean, look at this, in the 30-minute chart, it's just, I mean, it's bloody market. Red across the board, so be really careful because this is something else. There's a lot of fear of recession. There's a lot of fear regarding the soft landing and hard landing. And the big issue is that markets are still pricing in several interest rates cuts this year. We'll have to see, but I don't think that's happening this year. I don't think Feds are going to support really big the economy. But let's see. That divergence between markets' expectations and markets and Fed's expectations is going to be really hard to control, and that could destroy a lot of profits. So be careful with that. And I think that's all. Overall, two main things to watch today: the close of this candle above this daily pivot on 13,068, the defensive sectors that are really pushing. This is something worth watching for sure. And also the kind of day that yields are having. So take that into consideration. Don't be fooled and try to be naive or blindly buy because this is oversold or something like that, because this is something that it's already happening and it's well thought. Defensives are going higher while the rest of the markets is going lower. This might be not only a pullback. So be smart, be patient until new economic data changes that approach. And that will happen on Friday. So we'll have to wait until Friday to really see if unemployment comes higher than expected and non-farm payrolls came lower. And remember, bad news may not be good news anymore. Bad news might be bad news for the economy. That's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recap. Look at this. This trend really, really bad. So manage your expectations today. We have not been trading above this EMA for too long, not even one single candle on the 5-minute. So today's sentiment is super bearish. So be disciplined, be smart, be patient, and manage your risk. Stay safe, everyone, and please support the channel by clicking the like button and subscribe to the channel. Thank you, everyone, and see you tomorrow.